Welcome to the Radio Revenue Podcast. Today, we're embarking on a deep dive into something that, well, it touches millions of lives and really epitomizes global brand power: Nike, Inc. We're cracking open their 2025 annual report on Form 10-K. Now, for anyone unfamiliar, that's the big, comprehensive financial report public companies file each year. It's basically Nike's annual report card,
Absolutely. It's packed with crucial insights way beyond just the flashy headlines you might see.
Exactly. And our mission today is to extract the most important nuggets of knowledge and insight from this, well, mountain of data, give you a shortcut to being truly well-informed about where Nike stands right now.
And it's a fascinating document, I have to say, because it reveals not just the raw numbers, but the strategic shifts, the underlying market dynamics affecting a company of this immense scale. We'll be looking at everything from their, immediate financial health right down to the nitty-gritty details of their global supply chain and how they're thinking about innovation.
Okay, let's unpack this. You might think a 10K is just like boring financial jargon, but this is where it gets really interesting. Especially when you consider how Nike is navigating what's, frankly, a truly volatile global environment.
Definitely.
This report gives a rare glimpse behind the curtain, doesn't it? Seeing a giant facing some pretty significant headwinds.
It really does.
So, diving straight into the heart of their performance then, Fiscal 2025. What were the headline numbers saying about the health of the Nike empire, especially compared to, say, the prior year?
Right. Well, the top-line numbers immediately paint a picture of a notable shift, a downturn. Total revenues for fiscal 25 came in at $46.3 billion.
Okay.
Which is actually a 10% decline from the $51.4 billion they posted in fiscal 2024.
10%. That's pretty substantial for a company that size.
It is, and this wasn't just a general dip either. The report specifically highlights that Nike Direct revenues, that's their direct-to-consumer channel, dropped significantly by 13% down to $18.8 billion. Which means Nike Direct now accounts for about 42% of total Nike brand revenues. That's down from where it was. And maybe even more strikingly, within that Nike Direct segment, Nike brand digital sales, their online business saw a really dramatic 20% decline.
A 20% drop in digital.
Yeah.
That's quite a swing, especially after they pushed so hard into direct-to-consumer, right?
Exactly. It's a big number.
So what does that kind of revenue dip actually mean for their profitability? And what's driving it?
Yeah, that's the crucial question, because the report shows a direct hit on profitability. The gross margin, which, is a key indicator of how much profit they make from each sale before operating expenses, it decreased by 190 basis points.
190 basis points. So 1.9%.
Precisely, down to 42.7%. And while 1.9 percentage points might sound small in isolation, for a company with Nike's revenue scale, that's pretty substantial.
Right. So what are the reasons they give?
Well, the sources point to a few things. Lower average selling prices for Nike brand products, which they say is primarily due to higher discounts.
Okay, markdowns.
Yeah, more sales, and also changes in channel mix, basically, selling more through channels that maybe have lower margins for them. And they also recorded higher inventory obsolescence reserves.
What does that mean in simple terms?
It means they're setting aside money because they expect they'll have to sell off some older or less popular products at a big discount, or maybe even write them off completely. So it really reflects a deliberate, strategic action to clear out excess product supply in the market. They're using markdowns to do it.
Okay, so it sounds like they're taking some immediate pain on both revenue and margins, but maybe as a strategic move to clean house, inventory-wise.
That seems to be the narrative.
But what about the ultimate bottom line? Net income? And what are they doing for their shareholders in what sounds like a challenging year?
Right. Well, the impact definitely extends there. Net income for fiscal 2025 stood at $3.2 billion.
Okay.
Which is a very substantial decrease from the $5.7 billion they reported in fiscal 2024. And another key metric, return on invested capital, or ROIC, which investors watch closely to see how effectively a company uses its capital to generate profit, that also saw a big decline, from almost 35% in 2024 down to just over 20% in 2025.
20%. So that suggests their investments just aren't generating returns as efficiently as they were. That seems like a bit of a red flag for long-term growth, maybe.
It's certainly something analysts would be watching closely, yeah.
No.
It points to lower efficiency and capital allocation for that period. However, it's interesting, despite these financial challenges, Nike returned $5.3 billion to shareholders
Wow.
through share buybacks and dividends in fiscal 2025.
Ah, okay. So even with the tougher numbers, they're still prioritizing shareholder return.
Exactly. It highlights a clear commitment to, maintaining shareholder value and investor confidence, even when the P&L looks stressed.
All right. So moving beyond the raw financial numbers, what's Nike's secret sauce? How do they stay relevant, competitive in such a dynamic market? We all know Nike is innovation, basically, but how does that actually play out in their strategy, according to this report?
Well, what's really fascinating and comes through strongly in the 10K is their just unwavering, deep-rooted focus on product research, design, and development. They see it as a core driver of their success.
Right.
And it's not just about, creating new styles or colors. The report emphasizes technical innovation, things aimed at genuinely enhancing athletic performance, reducing injury risk, maximizing comfort, even reducing environmental impact.
It's a real R&D.
Absolutely. They leverage this huge network, internal specialists in biomechanics, digital tech, material science, but also a wide range of external experts. Think elite athletes, coaches, trainers, medical professionals, all feeding into testing and refining products. And that continuous cycle, that's what fuels the constant stream of technologies we associate with them, right? Like Nike Air, Zoom, Dri-Fit, Flyknit. It's an aggressive, ongoing investment in staying ahead.
Okay. Now, we talked earlier about that big drop in Nike direct revenues, especially digital. That felt like a bit of a pivot, or at least a stall, from their recent strategy. What does this 10K tell us about their overall sales strategy now? Particularly thinking about their relationship with wholesale partners. Are they pulling back from direct to consumer?
That's an excellent point because it raises a really important question about how they balance that direct-to-consumer ambition with their traditional wholesale business. And what's interesting is while Nike direct revenues decreased significantly, their wholesale revenues also declined by 7% on a reported basis or 6% currency neutral.
Oh, okay. So it wasn't just direct taking a hit.
No, it indicates a broader softness across both major sales channels, not just a shift from one to the other, really. Their stated strategy in the report is, and I quote, to reignite brand momentum and reposition our business to drive long-term shareholder value.
Reignite brand momentum. That sounds like they know things have cooled off a bit.
It suggests they're actively adapting to shifts in, consumer behavior and overall market demand. It might involve reevaluating just how much emphasis goes into each channel, maybe optimizing more for overall profitability and brand presence rather than just pushing direct sales volume at all costs.
So the short-term pain from those markdowns we talked about.
Yeah, they likely see that as necessary medicine to get to a healthier, more profitable long-term market position.
Right. Makes sense. Okay, thinking about Nike's truly global footprint then. I mean, they make stuff everywhere, sell stuff everywhere. What are the biggest logistical, maybe geopolitical challenges they face getting products from factories to consumers?
Oh, that's huge. If we connect this to the bigger picture, their international operations and supply chain are incredibly exposed to global risks. The 10K really highlights their heavy reliance on a quite concentrated network of contract manufacturers outside the U.S.
Concentrated, meaning just a few key suppliers or regions?
Both, really, for nearly all their footwear and apparel. For instance, while they have some Nike air sole component facilities domestically, Oregon, Missouri, a huge portion of their actual shoe and clothing production is overseas, with Vietnam being a major hub mentioned.
Okay, so if something happens in Vietnam.
Exactly. That geographic concentration makes them particularly vulnerable to geopolitical tensions, trade restrictions, tariffs, sudden increases in import duties, things like that. The 10K explicitly mentions that protectionist measures have already increased their product costs, and they're actively monitoring for potential additional anti-dumping measures, which could escalate expenses even further.
Wow.
And it even mentions they use a specific company, Sojitz Corporation of America, for import-export financing.
What does that tell you?
It just emphasizes how complex and financially intertwined their global sourcing is. It often requires specialized financial instruments just to manage the cross-border payments, the currency risks, the sheer volume of international trade involved. It's a constant, very high-stakes tightrope walk.
Yeah, I can imagine. Okay, let's talk risk and resilience more broadly. Nike operates in arguably one of those crowded and competitive consumer spaces out there. Who are they really up against, according to this report, and how do they plan to stay ahead?
Yeah, the athletic footwear, apparel, and equipment industry is, as the report says, intensely competitive worldwide. And it's not just about the traditional rivals anymore, though they're certainly still there. Obviously, they list the major established players: Adidas, Anta, Asics, Lululemon, New Balance, Puma, Under Armour, the usual suspects.
Yeah.
But the competition is fierce across every single facet: product innovation, marketing spend, pricing strategies, and increasingly, digital platforms and customer experience. What I found particularly fascinating, though, was the 10K's specific acknowledgement of rapid changes in technology, including artificial intelligence, and also a reduction in barriers to starting new footwear and apparel companies as significant risk factors.
So disruption from new players, maybe using new tech.
Exactly. It means disruption can come from anywhere now. A nimble startup using AI for, say, custom design or hyper-targeted marketing, or a new digital-first brand that can scale incredibly quickly without the legacy overhead.
So Nike needs to be super agile.
Incredibly agile, because the landscape for disruption is constantly expanding, and frankly, their established position, their size, can sometimes make them a target.
Yeah, makes sense. And speaking of being a target, with iconic brands like Nike, the swoosh, Jumpman, how do they protect what makes them unique? Especially in a world filled with counterfeits, and now these new complexities around digital threats like generative AI.
That's absolutely fundamental for them. Their intellectual property, the trademarks like the swoosh and Jumpman, plus a vast portfolio of patents on their technologies, is core to their brand identity and their competitive hedge. The report states they actively pursue IP protections in over 190 jurisdictions globally.
Wow, 190.
But
That's pretty much everywhere.
it tells you the sheer scale of the effort involved. But, as you hinted, it raises important questions about the evolving nature of these threats. The document explicitly mentions risks from counterfeit reproductions. That's an ongoing battle, obviously. But it also flags the newer challenges posed by emerging tech, specifically mentioning generative AI.
How could AI be a threat there?
Well, you can imagine AI-powered tools making it easier to create infringing designs, or perhaps generating convincing but totally unauthorized marketing content, potentially harming their brand image, or even leading to complex IP infringement claims.
Yes.
And beyond IP, they also face significant data security and privacy risks. They have to comply with this complex, ever-changing web of global regulations, GDPR in Europe, new, very strict data laws in China,
Right, it's huge.
all while constantly defending against increasingly sophisticated cyber attacks. So it's not just about protecting a logo anymore. It's about safeguarding their entire digital ecosystem, their customer data, their reputation. It's a massive undertaking.
Definitely sounds like it.
Maybe.
Okay, shifting gears slightly, but still related to resilience. A company this huge relies fundamentally on its people.
Yeah.
What kind of environment are they trying to build internally, and what are the strategic challenges in, maintaining that, especially when trying to attract and keep top talent?
Yeah, the human capital aspect is crucial. Nike emphasizes in the 10K a deep commitment to fostering an inclusive and diverse team and culture. And they outline specific initiatives designed to back that up, things like their Well-Being Week, where corporate offices actually close for a full week in the summer. And their 4-week flex program, allowing remote work for up to 4 weeks a year. Plus, they mention comprehensive family care benefits and even free financial coaching for their U.S. employees.
So it's not just about paying well, it's about the whole package.
Exactly. It's not just perks, it's positioned as a strategic investment in attracting and, importantly, retaining high-quality talent in what is a fiercely competitive labor market, especially for the kind of skills they need.
Right, showing they value their people.
It signals that dedication to human capital is a vital asset. And related to internal health, the report also details how their board of directors, specifically through the Audit and Finance Committee, actively oversees cybersecurity risk management.
Okay, so top-level oversight.
Yes, they get regular updates directly from their VP of Corporate Information Security, Risk and Compliance. It demonstrates this layered executive-level approach to protecting both the well-being of their people and the integrity of their crucial data infrastructure. It really highlights how integral people and data security are to their overall operational resilience.
Okay, so bringing all these threads together, the financial headwinds, the strategic plays, the risks. What does this current landscape mean for Nike's future financial strategy? Especially, you mentioned something about a change to their credit rating. That sounds like it could have a pretty significant impact.
It absolutely could, yeah. And it raises that important question. How do they manage their capital, their finances in this more volatile environment? The document confirms that Standard & Poor's S&P the rating agency, actually downgraded their long-term debt rating from AA down to A+ REAP. That happened in July 2025, according to the report.
Okay, AA to A+ REAP. What does that mean for them practically?
Well, for the listener, a credit rating downgrade generally means increased borrowing costs. It gets more expensive for them to borrow money, both for their existing credit facilities and for any new debt they might want to take on in the future.
And they have a fair bit of debt.
They do. The report shows substantial long-term debt, totaling about $7.96 billion at the end of fiscal 2025. So even a small increase in interest rates, driven by that downgrade, can translate into significant additional costs over time.
Right.
And partly to mitigate these kinds of global financial risks, the report also mentions they're actively managing their foreign currency exposures using hedging programs.
Hedging. Like betting against currency swings.
Sort of, yeah. It's a way to lock in exchange rates for future transactions. They mentioned doing this for various currency pairs, like Euro-US dollar, Chinese yuan-US dollar, which makes sense given how much business they do internationally.
So trying to reduce uncertainty there.
Exactly. It's a proactive approach to managing currency risk, which is pretty essential when so much of your revenue and your expenses are happening in different currencies all around the globe.
Okay. So with all these complex challenges, the revenue dips, margin pressures, intense competition, even that credit downgraded what's Nike's overarching goal now. What should we, as consumers, as observers, take away from this whole deep dive into their 10K?
Well, their stated strategy, fundamentally, remains focused on achieving sustainable, profitable, long-term revenue growth. That's the mantra. The 10K outlines their approach pretty clearly. Leading with sport, creating innovative, must-have products, building deep personal consumer connections with our brands, and delivering compelling consumer experiences through digital platforms and at retail. Pretty much the core Nike playbook.
So sticking to their knitting, essentially.
In terms of the core pillars, yes. But the current financial results, while showing those declines we discussed, are definitely presented as reflecting these ongoing strategic actions, reducing supply, increasing markdowns. They clearly believe these measures, this short-term pain, will ultimately, quote, reignite brand momentum.
Reignite, there's that word again.
Yeah, it really signals it's a classic long-term play for brand health and market dominance. They seem willing to accept some pain on the balance sheet now for what they hope will be a stronger, more resilient position down the road.
So prioritizing a market reset over just chasing immediate top-line growth figures.
That seems to be the clear signal, yes.
So, wow. We've taken quite a comprehensive deep dive into Nike's 2025 10K here, uncovering this fascinating interplay of financial performance, strategic innovation, those global market dynamics, and their internal resilience. From the just sheer massive scale of their operations to these really specific challenges like in digital sales and navigating that incredibly complex supply chain, it's just clear that even the absolute biggest players are constantly adapting, analyzing, strategizing. It's a perpetually shifting landscape.
Indeed, it really is. And what stands out, I think, is how a global leader like Nike continuously navigates such intense competition, economic volatility, constantly evolving consumer preferences, all while working diligently behind the scenes to maintain that iconic brand strength and their internal operational integrity. It really is a masterclass in corporate adaptation, even when the numbers aren't looking great.
This whole deep dive, it really makes you think, doesn't it? In an era where even giants like Nike face constant disruption, how much of a company's success is truly about the product itself, the shoes, the apparel, and how much is actually about the sheer agility of its financial and operational strategies in navigating this constantly shifting world? Something to ponder. It was a Revenue Radio podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.